Hi, in this video I'm going to give an overview of what the statement of profit or loss is. So in the previous video we looked at our statement of financial position, and now we're looking at one of the different financial statements. So the statement of profit or loss states the income and expenses of a business, over the accounting period. So this can be seen as showing the performance of the business over a period of time. So I have underlined the key things we had here, similarly to the previous video. We are looking at the income and expenses, and we're looking at a period of time. So other financial statements will be a snapshot. They will tell us what the business owns and what it owes at one moment in time, whereas the statement of profit or loss, we're looking at an accounting period. This is usually a year or 12 months, and so we have all the different forms of income of a business and all the different types of expenses of the business in that period. So if it made a transaction in, say, April, and a different transaction in May, and another one in December or whatever, all of these are going to be recorded in the statement of profit or loss, assuming they all fall in the same accounting period. So the purpose of the statement of profit or loss is to show the value of profit or loss the business has made over the accounting period. So obviously quite straightforward, as the name of this statement very much reflects what it shows us. So we know that this is a very important piece of information for a business, how much profit or whether it's made a loss in a period. So this is the purpose of the statement. We record all the income and expenses, and at the end of the statement we will be able to use the income and expenses to decide whether the business has made a profit in this period, in this accounting period. So again, as in the previous video, I'll give an example of what one of these statement of profit or losses looks like and try and talk through it very briefly. So if you come across one, it might make a little bit more sense. So again, we might see a title for the statement of profit or loss saying this is for our business, this one Blogs Limited, and it is for the year to, say, the 31st of March. So here we have our accounting period ends at the end of 31st of March. What this means is that we have all the income and expenses recorded from, say, or to the 31st of March 2010, and from, say, the 1st of April 2009. So any income and expenses that occur in this period will be recorded in our statement of profit or loss, and then at the end of this accounting period we will bring these all together and have a statement of profit or loss for the year to the 31st of March. And okay, we've put 2010 here, but it could be, we'll have one of these every year. So what we might begin with in our statement of profit or loss is just the revenue of a company and the cost of sales. So again, we have this pounds column here. We might, for a big company, see this millions of pounds. We can talk about millions of pounds here. So let's consider that this company has £10 million of revenue and £5 million cost of sales. I won't go into detail on what these terms mean, as hopefully we've got an idea of what they mean. Otherwise, I will cover these in a future video. But our cost of sales effectively is what it's cost us to make and sell these goods in general, but there are lots more costs that we will factor in. So we will then record our gross profit, which is going to be our revenue minus cost of sales. So here we'll have a gross profit of 5 million for the time being, and I'm going to stop doing these totals because it takes up a little bit of time, and because I'm just going to plug in loads of random numbers. So after we've got our gross profit, we have loads of other costs that we have to take away. So these aren't cost of sales, but we have operating income, we have distribution costs, and we have administrative expenses. We may, in different statement of profits or losses, see different things here, but they tend to refer to the same stuff. These are the sorts of expenses that we have to consider, and then we can from this calculate a profit from operation, and then after that we can subtract some other costs, which will be our financing costs, and we can add some investment income into the mix, and again we'll get a total for this. And once we subtract and add these costs or these income and expenses, we can get a profit before tax, and we can work out what this is, and we get a new total here. And then obviously we have to tax the profit of the firm, so we will subtract the tax and we'll get a new total, and this new total will be our net profit, which is what the statement of profit or loss is generally gearing up to show us. And every business at the end of each year will have either made a profit, so this will be some positive total, or it will have made a loss, and this will be a negative total. It could also, of course, be zero, in which case the business is broken even. But this does give us quite a bit of information about the business. Is this a profitable business? Is it viable as a long-term business or company or whatever it is? Is it making a profit? So that's the purpose of this statement. I haven't gone into too much detail, but that's the general idea, is that we have incomes like revenue, and then we have expenses like cost of sales, and we have lots more expenses, and we have lots of potential ways that we can make income, for example from investments. But that's what this statement does. It takes all our incomes, all our expenses, and we add and subtract these until we figure out what a business's net profit is over a period of time. So this period of time is going to be the year to the 31st of March 2010. So hopefully that made a bit of sense and gave some income into what our statement of profit or loss is. If it did, please do drop a like on this video. Make sure to check out the playlist for more accounting concepts, and subscribe to add some more econ to your subscription feed.